Hello, folks. Welcome to Pro Trader Strategies. It's Tuesday, September the 28th. My name's Eric Wilkinson, and this is Spotting the Trade. So before you go, make sure you guys hit that subscribe button. Also, there's a little bell right next to it. Make sure you have that clicked on as well, because like yesterday, I popped in unannounced when I found a trade. I want to make sure you guys are able to participate in that. So if you get that notification, you'll be able to jump on here with me. And if you guys have anything you want to talk about, throw it over there in the comments section. And if you're watching it on tape delay, I will circle back around for you folks to make sure everybody's clear of concept. And smash that like button. That feeds the bots to run out there and find somebody like you to share this information with. So please help us out and feed those bots. All right. So I'm going to talk about the economic data, see how it impacts the overall markets, and then we'll wrap it up with finding some trades that I'm talking about. All right. Across the pond, not a whole lot to talk about other than we have all these Fed governors, these financial guys talking about global economics and what they are going to do with these interest rates. So far, it looks like they're going to leave them unchanged. Powell testifying today, really not even talking a whole lot about what is going on with interest rates. It seems like they're more concerned about the diversity at the FOMC than anything else than interest rates at this point, which is a little bit bizarre. But let's get on with the economic data. Wholesale inventories starting to creep up here a little bit. Now, we've been talking about the PMI numbers, Purchasing Managers Index, those economic data, even the manufacturing, like the Richmond Fed, some of those are not necessarily the Richmond Fed because we've got the Richmond Fed today. But most of those manufacturing numbers were coming out a little bit better. A bit of a surprise because that was on a downslide there. But these wholesale inventories, PPI, PMI numbers were elevated, so giving us a little bit of hope that these purchasing managers are looking at an economy starting to claw its way out of these depths. Well, wholesale inventories ratcheted up to 1.2%, expected to be 0.8. We talked about this. Are they ramping up inventories in expectation that this is going to be a pretty big holiday season? We have yet to see that. Richmond manufacturing number. This is the first time we've seen this cycle, this number being really weak. -3, expected to be 12. Now remember, Empire, some of those other ones were the ones that we saw upticking a little bit here. And the PPIs gave us a little bit of belief that we were going to continue to see this trajectory. Well, consumer confidence came in a lot lower than expected. And I think that that is the catalyst that really put the negative sentiment into the markets today. Yes, I think that we saw the wholesale inventory starting to ratchet up a little bit, but really the consumer confidence was the straw that broke the camel's back, if you will, today. So without further ado, let's get on with the markets, see what's going on with that. Crude oil, we can see, is coming off after testing that $76 area. I was expecting us to stay in the 60s here, but we've talked about with some of the energy crunch, especially with the North Sea, the North Sea shut down. So they just built windmills up there that are not working. So they're going to have to find energy somewhere else, and it is likely coming from crude oil. That's why we started seeing this market start to jack up. But we got up there. Something to note here, as a technical analysis type of anomaly here, we've got tweezer tops. That would signal a rollover, bearishness coming. So is today's the first chink in the armor? I believe it is. Anytime you get outside the value area, you lose momentum. We also have that as our Fibonacci from right at the pandemic. We tested that once before and retested it now. Tweezer tops, it has to break through there for any type of bullish momentum to resume, get up into that 80 like a lot of people are talking about. Setup today looks pretty bearish right here when we got these tweezer tops and a topping pattern. So I would not necessarily want to be too long in the crude oil right now. Bonds broke out of that 160 handle. I was not thinking we would hold on to that. Yesterday we tested it. I thought that was a good enough test of it. Today we had to get into that 159 handle. Hopefully we can get a little bit of push to the upside. I don't expect interest rates to rise anytime soon. Now, yes, they are rising due to the fact that the bonds are going down. And when price goes down in bonds, that means interest rates are going up, folks. So yes, they are going up, not markedly, but we are seeing the 10-year go above 1.5%, which is the first time we've seen that in a while also. I still think that the momentum will take this to the upside, especially with the weakness we're seeing in equities today. Gold futures, a little bit weak today, still hold on to that 17 handle. I'm expecting us to see some inflationary pressures. That should drive the price of gold higher back up into that 1800 handle. If you guys been paying attention with these daily market commentaries, you know I've been selling Gdxj, which is the junior gold miners. It's a bit of a lagger to the leading market, which is gold. So I'd like to watch gold and then follow that lagger with this. So if any of this stuff is helping out, please make sure you guys feed those bots. Smash that like button. All right, VIX making a big spike here today into the 20 handle, as you can see. And that's because we're seeing a market in peril here, if you will. NASDAQ leading the charge to the downside. Dow's down about 350 points also, but that is less percentage terms than what we're seeing here. 2.5% down in the NASDAQ near the lows of the day. Testing the Fibonacci here. That's finding support. Now, remember earlier on in this week, we were setting this up with the head and shoulders, talking about the head and shoulders that's building out here. And we can see we've got a shoulder here, we've got the head here, and we were building out a little shoulder here. And I talked about this is the neckline. You can see we've broken below that. It was this neckline was holding for the better part of the morning. We came down there, tested it, and just held right above that neckline. Right now, breaking below it. Yes, there is a Fibonacci right there that more people are probably going to be keeping an eye on this number here with the Fibonacci extensions. But keep in mind, though, still, that is breaking that neckline for this chart. And I would expect us to not really see a whole lot of support happen here on this Fibonacci, but to complete this head and shoulders pattern. Maybe a little bit messy, but for the most part, I think we're going to look to test this trend channel again. All right. So head and shoulders pattern pretty much complete now, breaking the neck pattern we've been talking about for well over a week now. If this was going to happen, we're starting to see that show up here in the NASDAQ right now. And we've been on it, playing this to the downside. All right. So Gdxj Gold, we started seeing some more weakness there. Well, these guys are going to follow it as well, but I'm staying in this. Yes, it's broken below that bottom, but again, what we can see here is that this pattern down at the bottom really signals some nice bottoming pattern here. Yesterday was looking pretty good, but again, it's one of those setups where we never really know. You get a chart that looks like this at the bottom of a move. Now that looks pretty darn good, but again, we got the counter opposing dojis in this, where we got another one that kind of looked like that, right? And usually that, to me, at the bottom of a move is going to give us a little reversal of momentum. But today, again, we took another leg down. But still, having those candles that I like to look for in setups for a reversal. Now, obviously, you're going to want to see, like tomorrow, a candle that is green that confirms this move, but we haven't gotten it yet. I'm staying with my bullish assumption in gold, though, for right now anyway. I'm in the junior gold miners, so I'm going to be able to watch gold and be able to play my Gdxj a little bit as a lagger there. All right. Now, here we have Dow Jones down 400 points, but you can see it's only 1.5%. What we're seeing over there in the NASDAQ is markedly down on the day versus the Dow Jones, despite the fact that it's down about the same number. I don't think we're going to see the Dow Jones really correct like I would expect us to see in the NASDAQ, because it's breaking those chart patterns. Here I've talked about, we have the point of control here at on the Dow Jones. The point of control is going to act as a magnet for these guys. So with that said, I think we're going to kind of hang around here at this point of control area. Yeah, we'll probably test this. The real key, I think, is going to be a bit of a line right in there, because we've tested that a few times, you can see. So will this Fibonacci maybe get peeled through, especially as some follow through with the weakness that we're seeing across the board in the other equities. Maybe, but there's a couple of lines in the sand that we can keep our eyes on. I think it's going to hold support there for the Dow, while the NASDAQ and probably E-mini S&Ps will see some weakness. Just because we haven't seen that upside momentum, some of the valuations in the Dow Jones are much lower than what we're seeing over there in the NASDAQ and the E-mini S&Ps. Here at E-mini S&Ps, you can see down 1.5%, almost 2%. Again, creating that head and shoulders pattern. Our neckline on this one is a little bit dicey because it is a negative neck pattern. Usually we don't like to see that. But again, you can see head and shoulders. We got our left shoulder, head, and built out our right shoulder. Would like to see it break the neckline, though, for real confirmation. And here is our overnight trade. You can see basically not a whole lot of information coming out across the pond, but we did have the ECB president speaking. That could have caused a little bit of weakness here, as most of them are talking about slowdowns, really worried about China's growth. And then today, coming into our day session, you can see we got another leg down based on those manufacturing numbers, and the wholesale inventory is just a real wet blanket on the overall market. So continue to see some weakness there. All right, American Express. You guys know I played this to the upside, and we did this with the synthetic long at the 165 strike. So I was long the 165 calls, short the 165 puts. I'm trying to get out of this trade on this momentum move. We can see that it's getting a bit of a topping pattern, so I'm not wanting to stay in this any longer because I don't want the correction to happen. Topping pattern, just like I would get into this on a bearish move. I'm going to try and get out of this sometime today, right around $11. Last I checked, it was trading 10, but I'm working an $11 offer. If we get a bit of a pop here, I'll be able to get out of that. But I'm going to be looking to cover this trade today and get out of it. It's working right now, about $1 away. So I need a little bit of a pop there. All right, and Intel, if you guys remember with Intel, I also have a trade on in here. And I'm playing this, what was it? The American Express trade, the 165 synthetic long. I paid $3.90. I'm trying to get out for 11, just to be clear for everybody. And Intel, if you guys remember with this one as well, I am playing this with just the straddle. Remember we did this on the short straddle trade. While we have pinned right there at the point of control, I was expecting us to continue to see some volatility coming out of this. Today, you can see volatility spiking because of what's going on across the board and the rest of the market. People are putting on hedges and things of that nature for Intel. So it's trying to drive that volatility higher. That's kind of offsetting this trade for me on being able to get out of it, because you would think that with the theta and everything else going on, I'd be able to get out of it. But this little bit of spike is kind of offsetting that move for me. So a couple of working orders today. Just make sure you guys are clear on that. That's the only thing I'm really looking to get out of. I'm going to ride everything else for the better part of the day. But I am trying to get out of Intel and American Express a little bit better than where we are now. That's about all I got for you guys. Before you go, though, make sure you smash that like button. Feed those bots. Don't forget to subscribe, because sometimes I pop in unannounced. If I see something or something pops in that I want to make sure you guys are in on, I'm going to pop in here and talk about it. So if you have the bell clicked, you guys will know about it. All right. And if you can't take that, take it easy. Bye for now.